Welcome to EY India podcast. I am Pratik Parik, partner in transaction intelligence. Today we have Srijit Menon, who is the CEO of Niwas Housing. His journey has been phenomenal. Experience of 20 years in the lending company, one of the large and renowned company like HDFC, HSBC, Muthoot Fincorp, and 9 years with Niwas Housing. So I welcome Srijit Menon.
Thank you, Pratik.
Srijit, so great. Thank you so much first of all for coming for the podcast. What I wanted to just understand is your own perspective, you being CEO now, how you have been seeing the transformation journey, starting from good old HDFC days to now to Niwas and 9 years with Niwas.
Yep.
So, would love to hear from you on the transformation.
No, so as you said, I started my career with HDFC back in the early 2000s. And that was a very different time when housing finance was still a business that only a few entities kind of ran in the country. And HDFC was the market leader at that point of time. So the foundational years were good. The real estate prices were low. Housing rate interests were coming down. And so the business was booming. Okay. And if I look at the last 2 decades, so much has happened over the last 2 decades, particularly in the last decade, which I think has been transformational with the new government coming in, focus on affordable housing. And that's pretty much the industry that I've been, in the last decade and a half. And I would say exciting times. Niwas is my longest stint. Spent 9 years at Niwas, and building something bottom up has always been exciting for me. So I would say it's been very exciting.
And if I were to ask you, what has been fundamental change in last 2 years with Niwas?
Yeah.
And of course on the housing sector, if you can just talk about both.
So Niwas, we've had a period in the past where we almost had a existential crisis, so to speak, right? And, the resilience of the team really got us out of that to a period where now we have reinvented ourselves. And really the brand Niwas has been at the center of it. So the brand changed, the tagline that came along with it, Aapka Niwas, Hamara Vishwas, right? And the things that we have done around technology, leadership, processes, and what really can be a better reaffirmation than getting institutional capital backing from the most pedigreed promoters in the country, right? The private equity fund Equity, which invested in us. Yes. So today I would say we are at a cusp of a growth. We are now a name to reckon with in the affordable housing finance space, and we're ready and confident out there to leverage on the India affordable housing story.
Awesome. So thank you so much. I think that really helps us in understanding. So moving on to the second question, I think what I wanted to understand the market shift, the whole dynamic, the demand side, that has how evolved in last 5 years. And there are 3 segments, which is prime prime segment, the informal, and the affordable segment that we have. How have you seen the whole demand shifting in last 5 years, and how you would see the customer also behavioral changes in last 5 years? So that would be great to just understand.
So, housing is a structural credit story. And when you think about housing finance, in the past, you thought about the prime segment, and that's where much of the underwriting was happening. I think over the last 5 to 7 years, this decade, you've seen the affordable housing story play out.
Yeah.
And really, Pratik, India is all about the low income segment.
True.
And that's where you see a lot of customers moving up as India progresses, the income levels of households going up and the demand for housing coming in.
Yeah.
I think the fundamental shift that we are seeing is the urbanization. And that urbanization is moving people from the villages to the small towns, looking at, constructing their first homes. Mm-hmm. And so affordable housing finance is now really not just a buzzword anymore. It's not a wave anymore. It's a tsunami that's hitting us.
True.
Right? And so if you are in that space, you understand that segment well. And by the way, this requires an infrastructure where you are going right up till the last mile. Banks don't have that infrastructure to be able to go up till the last mile and deliver credit. And there is an inertia that this customer segment has. And this is where housing finance companies like us, particularly the entities that operate in the markets that we operate, tier 3, tier 4 markets, have a huge opportunity to really leverage on the demand side of things.
Absolutely. And I think what are the structural shifts you would have seen in customer behavior or the ecosystem in last 3 years?
if you look at the last 3 years, I think there's a lot of data now that is available. So I think the one biggest factor that we underestimate is the formalization of the customer that is taking place. So unlike earlier where you used to do a lot of on the field assessment, today there is a lot of data that is involved in the GST data, the banking data that is there, the identity data, and so your ability to really triangulate information from multiple data sources is one big advantage that you have in terms of underwriting these customers. Digital and the technology aspect is needless to say is moving at a rapid pace. So I would think the 5G penetration that's happening across the country is giving access to these customers to really reach out for products like housing finance and get their housing loan needs fulfilled.
One, personally, I've worked with Niwas, so but one question I would like to ask is that how would you evaluate the risk parameter? Because there have been so much of digital focus has been to evaluate the risk profile of the customer and to eliminate all those fraud stuff. How has your journey been in last 3 years in Niwas on that?
So when we think about risk management, generally you think of risk management and growth as two opposite pillars, right? It's really not the case. It's about really integrating risk into your business decisions and getting risk management upstream, which means you're essentially baking in risk management right at the time of sourcing and using that as parameters to decide which customer will go straight through, which customer will go through a credit intervention. So I think that's the first step, to be able to look at taking risk management upstream, to also do a lot of predictive risk management rather than reactive risk management, right? So predicting how the customer's behavior will be in terms of his repayments, predicting other aspects of the customer, which will help you take a better underwriting decision and serving the customer well. So I think that's the fundamental shift that we are seeing. And with data, with the leverage of new technologies, I think our ability to scale the business, keeping the risks intact, is something that we see is a big, big benefit that we have today, which we didn't have maybe 5 years back.
Yes, absolutely. So thank you so much, Srijit. I think one thing what I wanted to understand is, like, we operate in a ticket size of 10 lakh to 15 lakhs, right? So how do you design your customer journey? How do you balance the reach? Because these are, I think India is a big country. There are pockets in south, there are pockets in north and west. So how do you design your customer journey to reach there, to be productive, and then ensure that the customer experience is far enriching with Niwas?
So I think customer experience is at the heart of what you have to do. And as you rightly pointed out, India has 22 states, but it's like every state is a country in itself. So what works in the south of India may not work in the west and north. And so what we do is, when we look at our policies, we look at geography specific policies. We go into those geographies, we sit with the teams out there, we understand the collateral framework, we understand the profile framework, and then we design our policy which is aligned to the needs of that particular segment. So it's not like a one size fit all policy that we do. And it's very important because you're dealing with an informal customer. So while you have all of these policies in place, I think the ultimate piece is to deliver this with a lot of empathy, a lot of care, because this is a segment that requires that. And so how do you balance out, having geography specific policies, but how do you deliver this in a very empathetic manner on the ground to the customer is, I think, what the differentiation is all about.
Rightly said. I think really I can understand it being in this field. As you scale up and accelerate, I think, how do you ensure that the risk and compliance is kept in pace, and being across geography they are so different? So how would you put the risk parameters also intact when you grow?
So Pratik, one of the things that we've always believed is that we'd like to go deep into geographies rather than go far and wide. I think that's the fundamental strategy that Niwas has always adopted. So when we started the business, we started with 3 or 4 states that we understood well. We build a strong leadership pipeline in those states, and using the leadership is how we deeply penetrated into the interiors of that state. I think that's a fundamental requirement when you're looking at running a business of this complexity
True.
into the tier 3, tier 4 towns, is to have a strong set of leaders at the top. And so that's been one area where we've done that. Like I said, we've triangulated information. We have looked at real-time risk parameters, and we've looked at the collection feedback that's coming in, so that can feed back into our business rule engine and ensure that policies are updated real time. And so we don't have to wait for an event to occur. We would actually predict that something is going to happen and then make the course correction accordingly.
Awesome. I think now coming to the question, which is more value data driven. I think in terms of quality of growth, what are the 2-3 metrics you would never compromise on?
I think the foundation for our company has been the strong governance. I think there is a huge premium that entities get for being well governed, for being high on compliances, and I think that's something that we take great pride in. Absolutely. I think the foundation has to be of having a strong compliance driven culture, and that's really about building the culture. So we believe that we will do things which are sustainable over a longer period of time, rather than trying and do things which are very tactical. And so I think that's the first thing, the governance part of it. And with that comes in the culture. What is the culture that you're building? So there's a culture of meritocracy in the organization. There's a culture of deep operational understanding, and there's a culture of collaboration. I think this becomes very important when you're running organizations like this, that it's a very collaborative workforce out there. Okay. And I think, in data, there is truth. Right? In everything else, we believe in God. So I think we are trying to build a lot of data to be able to give us insightful decisions rather than just rely on judgment. While the entire segment is based on a judgmental underwriting, but you have to supplement it with a lot of data. So I think compliance, which becomes the foundational layer, culture, which allows you to really build a very strong organization, and then having a strong data at the back end. I think these are 3 things that we are really working on as we build Niwas out.
And what do you believe is the real value driver in the housing finance industry, from sourcing to underwriting to collection? More even in terms of profitability, because ultimately, the ROA and ROE is what drives.
That's right.
So how would you answer that?
So when you think about value equation, we think in terms of the return on asset and the return on equity to the stakeholders, and what are the aspects that make that. It really depends on how well your distribution is, which helps you build the deal pipeline. True. But once the distribution is in place, it's the underwriting which is the moat. To my mind, if you have a strong underwriting base, which can allow you to write across cycles, and Pratik, we have seen many cycles over the last 5 or 6 years. If you have a strong underwriting mode, which can allow you to build through cycles, and we have a strong collection mechanism which can preserve the underwriting that you have done, then I think you're in a strong wicket. Finally, it also comes down to the customer acceptance. So a strong customer referral rate matters, because in this business, word of mouth matters. Absolutely. So if you have a happy customer experience, he's going to refer you most customers. And that's how I've seen the largest of housing finance companies really work. There is no branding, there is no marketing, it's just word of mouth. True. So I think underwriting, which will be the central to it, and then backed by a very strong trust-based approach to customer is what will really help you survive in the long run.
Digital has been one mantra which has been going on since like 3 years. So, and transformation has been great. Everybody's adapting to AI. So, how has the company and also the industry adopting to the whole digital transformation? If you just talk about, if you could talk about that.
Yeah, I think a few years back we had manual processes, we had application forms that had to be filled. All of that has gone off. I think the processes have all got digitized. Now we are taking it to the next level in terms of saying, how can we leverage on AI? How can we leverage on agentic? But when you think about a housing loan, it's a 15-year product. Unlike a personal loan product or some of the other shorter tenor products, where a 30-second loan today is in fashion. Speed is important, but speed is not the only criteria. I think what is important is to be able to deliver a strong customer experience and deliver it on the backing of a strong risk framework. So when we think about our business, we think about not just how do we build the top of the line funnel, which is the lead pipeline, which comes in through multiple channels, which is another area that is our focus on, because you need to have a sustainable business, you have to have a strong top of the line funnel. Once they are in, then how's your underwriting engine in the middle?
True.
The risk-based underwriting approach, which again is very rule-driven and built with all the data that comes back. And then you apply algorithms on top of that.
Yeah.
And you have to give all of this real time to the underwriter. The human intervention has not gone out fully.
True.
Ultimately, how do you make the decision taking of a human more informative, real time, for him to be able to take the right decisions?
Yeah.
That's the way we are looking at digital and technology, to be able to provide the information in a cohesive format for people to take those decisions and to be able to help move the business forward. So I think it's going to be a very good hybrid between the two.
And where do you see the real competitive edge emerging from digital investments?
I think if you look at all the aspects, whether it is the TAT and the ROI that TAT can deliver,
True.
Whether you look at the risk management and the credit cost that you can save with a strong risk management framework on digital, I would still think it's the customer experience where this will matter the most, because if you are able to deliver customer experience in a way that he's not imagined before, and today when you think of customer experience, you're not just thinking within housing finance, you're thinking across industries, right? How does he have an experience on Blinkit, or how does he take his cab experience on Uber is your benchmark today.
True.
Right? So if you're able to deliver a strong customer experience in his engagement with you, I think that's going to be the single biggest driver in terms of the ROI on technology.
No, so awesome. I think we've covered a fair bit of questions on the entire industry. I think last, I think on a closing, I would like to understand, EY has been partnered with you in your entire journey, and it was a pleasure working with you. How would you describe your experience of working with EY transaction team?
See, I don't want to give a generic answer to this question, because I don't think it will do full justice to the efforts of the EY team. I think the experience has been extremely invaluable. When we started this engagement with EY, it was of course going to be very intense, and we were ready for that, because it's basically about getting our organization bearing ourselves to all the information points that EY wanted. But one thing that stood out about EY was its deep domain experience and the understanding of housing finance, which I don't think we'd seen with any other player in the space. And so those conversations became very enriching. And sometimes there were discussions which were perhaps leading into debates, but they were very constructive debates. And I think what EY understood and appreciated is the operator's understanding of the business. So it made the whole due diligence process, I would say, very informative. It helped us a great deal. The proof of the pudding is that the capital raise happened at the end of it. And I think I would say we became a better management team by virtue of the due diligence that EY had. So I would thank EY for going through that process with us, and for giving us so many nuggets of information in the whole process, which helped us understand our business better.
Thank you so much, Rijit. This comes to an end to the episode. We really like discussing with you. And towards the end, I would just like to share that we had a great discussion on Niwas and on the entire housing finance industry.